Welcome back, my friends. Thank you so much for tuning in. This is Silver Slayer, and we are here with Andy Shectman, the CEO of Miles Franklin. We have a weekly show. Every week we link up, we talk about precious metals. As you guys know, Andy's the CEO of Miles Franklin. If you guys wanted to purchase from them, which I highly recommend, send an email to info@milesfranklin.com. Let them know I sent you. Andy would love to hear it. Great guy. We have a lot of good conversations on here. I'm looking forward to this episode. So, Andy, what's up?
Good to see you, my man. Good to see you. Good to be back. And nothing. It's a crazy world, but we're hanging in there. Glad to be here.
Yeah, same. Yeah. Crazy world, man. It's like every day something new comes out.
And those things that come up used to be, earth shattering. What happened once every,
Yeah.
great while, and now it's every single day there's
Yeah.
something new. It's like we've become anesthetized,
Yeah.
numbed, I guess.
Desensitized was the word I
Yes.
was going to use.
Yeah.
Desensitized. And that's actually a good point that I never even thought about before is, precious metals is a safe haven and in times of economic uncertainty and fear, and that's usually when people turn toward. But if we are becoming almost desensitized, that could actually play a part in the decisions they make with their money or how they view the world. That is interesting, actually, because I think we've talked about before the psychological aspect of investing, how important of a role that plays. If you're someone who's very anxious and always worrying and fearful, how different of an outcome you could have compared to someone who's very cool, calm, and collect and doesn't get caught up in the day-to-day.
I think it's important to just mention that, I think there are people out there, well, I won't mention any names, but they'll tell you that the metals market's not suppressed or manipulated. And I think there's enough information out there and admissions by, JP Morgan, and they're fine, and all of the empirical evidence that indeed the markets are controlled. Okay.
Yeah.
And very often they use, whoever they are, the counterintuitive nature of the price action of the metals market to throw people off the trail. In other words, why hasn't gold gone to the moon and silver gone to the moon in the light of chaos geopolitically, uncertainty politically, 40-year high inflation and all? And that's a valid point. It's fair. The suppression of the metals market, and you can see it if you look closely at the concentrated position. 4 banks holding the largest concentrated position on the silver market on COMEX, more so than any commodity traded on the exchange. And so it's very obvious that the market is controlled, and they will use the suppression to throw people off the scent when it should be going up. But like I've been saying, what betrays the metals price is the amount of deliveries off of places like the London Metal Exchange, the backdooring out of the ETFs, the deliveries off of COMEX. In other words, the sophisticated money who's closest to the information is using price suppression to privately and quietly accumulate the physical. So they suppress the price with leverage. They gobble up the physical because people are only focusing on price and not looking at fundamentals the way that you and I do, because every day we're digging for information and we see the fundamentals. They don't. And it's of no fault to them, really. I guess you either go down this path or you don't. And if you don't, you see the price and be like, well, what are they talking about? The price isn't doing anything. But if you look closely, you see the most well-funded, well-informed, most sophisticated traders on the planet gobbling up massive shares of physical metal and using price suppression and rhetoric to do so. And they'll paper that over too to get out. And I think that's, one of the things that we're seeing, to me, that is most telling about where things ultimately will end up.
Yeah. Price is the greatest tool of misdirection.
Right.
And I was actually covering an article yesterday. This guy, I'm not going to say his name, but he posted an article titled "Why Investing in Precious Metals is a Bad Idea." And he goes into all that stuff about how gold and silver never perform, but he doesn't mention suppression. He purposely used so many points that didn't have enough context to even make his point relative. He fit to his narrative. And I even while I was covering the interview, I was like, I bet you this guy is pushing something that's pegged to the dollar that doesn't go with the precious metals grain. And that's why he's portraying it this way. And then go up to the top, all of a sudden you see it, all this BS. And I was like, man, like I hate that type of stuff. But
the commitment of traders report is way behind, right? Because of that hack on this Irish company that provides the feed. But the commitment of traders, just to give you an idea of how they suppress things and what it really is like, the commitment of traders report that the COMEX produces each week was delayed, or they haven't issued. They just started issuing it again, going back to, I don't know, early January when this hack happened. And the February 7th commitment of traders report came out last week. And it showed huge improvements in the commercial net short positions in both gold and silver. I just want people to understand something. Currently in the registered category, because JP Morgan put 7 million ounces into it last week, and I believe that is specifically because one of their short positions is demanding delivery. That's the only thing that I can think of why they would have moved it into registered. But I believe that's what's going to happen. They know that a delivery is coming here. But even still, there was 32 million. Now there's 39 million ounces in the registered category. Those are the bars that back the contracts that that could be delivered. On the February 7th commitment of traders, I think what they've been doing is they hoodwink once again the managed money into going short, and they drive the price down. And on February 7th report, it showed that the commercial traders' net short position fell by 10,755 COMEX contracts at 5,000 ounces a contract, or 53.78 million ounces they covered. So commercial banks let the price get driven down, or they push the price down. The managed money drives it down, taking the other side of that. And then they come in and cover 54 million ounces worth of silver, almost twice what is held in the registered category. This is manipulation. You have 4 to 8 banks that their short positions are the sole determinant factor right now of the metals market. And then in gold, the commercial net short position fell by 27,554 100-ounce contracts, or 2.755 million ounces. So the commercial banks are starting to cover. Now, is this the beginning of a trend? Do they realize that being short in a market like this, when the world is draining the exchanges and the fundamentals are growing by the day, is a stupid proposition, is a very risky proposition? Maybe. Who's going to be left holding the bag? It'll be the hedge funds, manage money, because when these guys are covering those contracts, they're going long. They're buying those from the managed money, who's taking the opposite side. So I just think that these are very interesting times, and the market is suppressed. And as I've often said, and you just mentioned, price is the greatest tool of misdirection. And it allows either acquisition or pickpocketing by the commercial banks or the sophisticated money, because no one looks at anything besides the price. You got to really look hard and lift up the hood and see what's going on underneath to make that proper decision. But yeah, I think hopefully, and in particular, we should talk about what's going on with the states. Maybe there will be some information, or some people will start to finally wake up, largely because what's going on with the states and their changing attitude towards metal. Maybe people start to wake up and jump in on the investment side, where currently less than 1%, the figure is 0.5% allocation to metals in this entire country in all assets. So, I think I take optimism in seeing that the price is low, but the biggest money in the world is front running that by positioning inside that environment of low price and poor rhetoric. And they're going to position until they're fully loaded up on it and de-dollarize, and then they're going to let the price run.
Yeah. That's the hardest thing to explain to people is, if they are looking to get it like let's say I was talking to my friend, or my uncle or something, and I was talking about silver. He would mention, well, gold and silver, they don't really do anything. They haven't performed well. And it's not even about that. It's not even about that. It's not trying to get rich. That is what makes you rich. That's what your security is financially. And if you're trying to look at it from, oh, well, silver's still 20 something dollars. What if in 20 years it's still $20? It's like, that's not even the point. That's not the point at all. And I feel like a lot of people don't understand that is looking at silver as money and not just trying to make more money. But I did want to mention real quick, since you were talking about the COMEX and this whole facade they're putting on, do you, and I've actually I've covered a lot of Ted Butler's work on this. Do you think the COMEX could ever freeze or collapse, and what would that look like?
Well, I think the numbers would say that they absolutely could, but I think before it happens, they'll do the same thing that they did to the Hunt brothers. They'll change the rules. They'll
Hmm.
enact force majeure. They'll raise the margin limits to the moon. They won't allow delivery, which is the
Yeah.
same thing as default. And at that moment, if I were the Russians, that's the minute I'd turn up the heat with the Moscow exchange, and I would start to raise the bid offer price for gold and silver substantially, put gold at 2,500 an ounce, put silver at $50 an ounce, and immediately you would see arbitrage. Everything would flow eastward. It would expose the COMEX for being a sham. That if you're not able to take delivery, then what
Right.
does the market really mean? And when you realize that, many times the amount of contracts trade as our bars backing it, it's not right. It shouldn't be
Yeah.
that way. It shouldn't be a casino. This is
Right.
not what the exchanges were designed for. The exchanges were designed for entities to offset risk, and instead it's being dominated by hedge funds and commercial banks that are speculating using, rehypothecated many times over contracts of gold and silver that if they stand for delivery, that moment would happen. I mean, you could see that just by the open interest leading up into delivery months. Many times the number of contracts that could stand for delivery are far greater than the registered category has available.
Yeah.
So somehow mysteriously it always is pared down leading up to that amount. But nonetheless, yeah, just in reality, it could happen. But look, the banks are the ones that are all members of the CME group. They won't eat themselves. But I think the moving to force majeure, not allowing deliveries would be the same thing as a default. So yes, it could happen.
Yeah. When people are looking at the COMEX or trying to understand like what that even means. The Hunt Brothers situation, by the way, was insane. These guys tried to turn all these contracts into physical, would expose the COMEX. So what it was called Silver Rule 7, where they just made this rule on the spot basically. And during all that was when silver was the highest price it's ever been, still till this day. But regardless, there's this ratio, and I think like this there's this ratio called the 250 to 1 ratio, basically meaning like every 250 or every ounce of silver you hold in your hand, 250 other people theoretically own that, like digitally, and then they use that 250 times spot price and they come up with like $5,000 an ounce or whatever. But it's interesting because when you look at this, it does make sense, but it's not saying, oh, silver will hit that. It's just in a perfect world, if everything would be 1 to 1, that would or could be possible. And like the guy says, according to Bloomberg, it says the size of the global annual silver markets equal to $5 trillion. According to a recent interview with David Morgan, the annual physical silver production is roughly 1 billion ounces, which is actually a little lower, I think, like regardless. And then he goes, with silver trading $20 currently, this represents a $20 billion market for physical silver. So the size of the physical silver market's 20 billion. But then he goes, the above discrepancy, which he's talking about this, makes for a 250 to 1 ratio between the paper and the physical silver market, meaning for every 1 ounce of physical silver, there are 250 ounces of paper silver circulating in several financial products. In other words, only one contract or certificate issued out of 250 could be convertible into physical silver. And that's being leveraged to 1. So then they say 5 trillion divided by 20 billion is 250 times spot price is $5,000 an ounce. But he's saying, he's not saying that's what silver will reach. But if you add up and put this realistically or, factually, that would be a price. Like, what do you think about that?
I mean, I think mathematics are real. I
Yeah.
mean, you could take a more conservative approach, and you could take the price of gold and divide it by 7,
You're
and
talking
that's
about the
the mining
ratio.
ratio.
Yeah, the ratio
Yeah,
comes out of the ground. Yeah.
right. And the thing of it is that the exchange and the futures market should not control the price, and it's the tail wagging the dog, and that's exactly what it is, in the respect that, yes, there are way more contracts out there than there are bars backing those contracts. And so, whether it be 250 times rehypothecated, whatever that number is, it just goes to show that it's a scam, that the price that we
Right.
see is not reflective of reality,
Right.
where it's being controlled by the futures instead of the underlying commodity. It's the same reason that they were able to push oil to negative $40 a barrel. It's not how the market is supposed to work. But put gold at $3,000, which to me is conservative appraisal. Divide it by 7. What do you get? You get over $400 an ounce. So whether it's 400 or 5,000, I guess you could sit and it'd be a fun thought experiment. But the bottom line is, any way you look at it,
Yeah.
logically, mathematically, geologically, price ratio historically, it's out of whack.
Yeah.
And from every fundamental, whether the fact that it's depleting in nature, used to be 16-1, now it's 7-1, expansion in its uses in industrial applications, massive renaissance in physical demand for monetary assets. Any way you look at it, it's way undervalued. It checks every box in terms of it being not just a suitable investment, but maybe the one of a generation. And
Yep.
I try to be impartial. You can't be subjective and be successful, I think, because it's very easily outed when you see you're not being objective. And I look at this from every single angle, and I do not see a reason that silver should not be considered the value of a generation.
Yep.
And then when you see the amount of effort that is being used to hold back the price, the largest concentrated position in any commodity traded, huge deliveries going to commercial banks, bleed down of inventory from the exchanges, using price as a tool of misdirection and rhetoric, and even the talking heads at the Silver Institute. I mean, it's just a situation where you have to trust your gut, and either we're going to be right or wrong. Everything that speaks to my soul, tells me that we're on the right path. But sometimes you got to have real strong fingertips to be able to hang on
Yeah.
and trust your conviction and your gut. And
Yeah.
I think those that do, in the end, will be glad they did.
Yeah. And I've actually mentioned this before, and then a lot of people, regardless what silver does, they'll be passing it down to their kids and grandkids. So a lot of people, they're never going to sell, because I ask people, what price would you throw in the towel? Is it $500, $100? Have you even thought about that? Because a lot of people probably don't think about that. Like, what price would I be willing to sell at? Or like, how many years? 5 years, 20 years? Never. A lot of people said they're not going to sell. They're going to pass it down. And I was like, that's pretty cool. I mean, because like I have a daughter and I probably would, but someday you do think, maybe paying off a mortgage or something, taking some off the top. But anyways, speaking of, selling and buying precious metals, I wanted to bring this to you because I don't know too much about it. If I don't understand something fully and someone asks me, I don't want to talk about it. And since you are the CEO of Miles Franklin, I figured I'll throw this at you. What's up with taxes on precious metals? Can you break this down? Because a lot of people are, I don't know if confused or just want to know the whole gist about this thing.
And when you buy gold and silver, there are no taxes and no reporting, as long as you pay with a check, a wire, a e-check. The only time there would be reporting on purchase if you paid with cash over $10,000.
10,000, yeah.
But that would be the same thing as if you went to PGA Superstore and bought 5 sets of golf clubs for your entire family, and outfitted them without wardrobe and shoes, and then when it's all set at the end of the day, it's $10,050, and you pull out $100 bills and pay $10,100. They're going to issue a Form 8300. It's not specific to gold. It's
Right.
anything in the United States. And the Form 8300 is, you paid for something with cash over 10 grand. And then it asks you that, your social security number, the number of bills you used, the denomination, all that kind of stuff. Because if you haven't shown through tax records that you're capable of receiving a Form 8300, you may get a knock on your door. But when you buy anything, you could write me a check or send me a wire for $50 million. There's no reporting, no taxes. All right. When you sell, in terms of gold, there are 4 items that trigger dealer reporting on sellback. In there are 3 coins and then bars. So in bar form, if you sell gold bars that exceed 1 kilo or more, 32.15 ounces, the dealer would need your social security number, would file a 1099B miscellaneous income form. So you could sell 32 1-ounce bars. It's still your responsibility to file that and tell it's the honor system, tell the IRS or your accountant that, hey, I paid X a few years ago. I sold them for Y yesterday. That would be 32 bars. The minute you cross 32 bars, 32.15 being a kilo, then we do the miscellaneous income reporting, the 1099 for you. So that's bar form. In coins, it's gold Krugerrands, gold Maple Leafs, and Mexican 50 pesos on the 25th ounce. You sell 24 ounces, no dealer reporting. You sell 25, there is. Now, you could sell 24 ounces today and 24 in 3 days and 24 in 5 days, as long as you don't tell the dealer that, hey, I got 100 coins and I'm not paying taxes, so I'm going to break it up in 4 transactions. No, don't do that. Just simply sell under 25 ounces as frequently as you like in individual non-related transactions. That is the law. My job is to show you where the law is, to allow you to look over it but never step over it. That is the law in gold. On silver, again, no taxes on purchase, but when you sell it, if you sell more than 1,000 ounces in bar or generic round form, no sovereign coins, just bars or rounds, on the 1,000th ounce, 1099B is filed. And then junk silver, pre-65 dimes, quarters, and half dollars on the 1,000th dollar face value triggers a 1099. That's it. Now, all of these items, junk silver, silver bars and rounds, gold Krugerrands, gold Maples, 50 pesos, and gold bars, at one point were all listed on the exchange. And that was the deal that ICTA, the Industry Council for Tangible Assets, made with the IRS. That when you eclipse these numbers in what is being sold back, that we, the metals industry, has to issue a 1099B. Anything under that amount in individual transactions would not be the case. And so infer from it what you will, but that would be, in any case, I'll put it this way: no matter what you sell, got a lot of publicity about the woman who bought almost 1 million silver eagles. She could sell every one of those back to me. I would do no reporting, but she would have to. So it's dealer reporting that is triggered on some of these other things, but it's always the consumer's job to report to the IRS or through their accountant when they sell something and have a gain.
Yeah. Interesting. Yeah, I didn't know. And that's the thing. That's the cool thing about having this show with you, is because I'm sure a lot of people do have a lot of different questions. And actually, I know one person emailed me. They were from Canada, and they were asking about this as well. How different is it from country to country with this stuff?
I'm sure it's very different.
Yeah,
the IRS and Revenue Canada are very different. I'm sure there is some similarity, but I think all of them will require some form of reporting when you sell an asset with the gain. One other thing that I'll mention, the very nature of metals, like, I always talk about how I've been buying gold and silver every 2 weeks for 33 years. I'm sure I don't have all my receipts going back to when I was 20 years old. The IRS would ask for your best faith estimate at that point. So they realize that by their very nature, this is something that gets put away for a long time. As you were saying, some of your people you talk to never want to sell it. Well, maybe they do need to sell it. Never comes a day or two early. What did they pay for it? Crap, I don't remember. What do you think you paid for it? Well, I think it was in 2004. All right, let's go back to 2004. What was the price? So they ask for your best faith estimate, but it's not a perfect science in any
right. Yeah. All right. So I did want to ask you, is there any market updates? Anything with the BRICS nations, anything interesting that's happened? in the last week or so since we talked?
I mean, you got there's not, well, first of all, before I talk about the BRICS, have you talked much about the states that have been um, approving gold and silver for legal tender? So, Wyoming and Missouri just passed legislation to not only have gold and silver as part of their assets, state-owned assets or reserves, but they also have enabled them to be legal tender for all debts, private and
Yeah.
public. Kansas has this on the docket. I believe Tennessee does. Boise, Idaho just did the exact same thing. And I wanted to
Wow, I
read.
did. Yeah,
Sorry.
I know. I covered one state. I didn't know there's multiple now.
Oh yeah,
Oh
there
wow,
are multiple: Kansas, Idaho, Missouri,
Wyoming.
Wyoming. And I wanted to read to you something from the representative from Idaho, which, I talk a lot about the central banks buying gold. They've been buying more than the second most in history, more than any time since '67. And Representative Vito Barberi said on the speaking on the House floor in Idaho that we need to give our treasurer the ability to consider doing what so many central banks around the world have been doing, which is acquiring gold. Gold and silver are also right there in our US Constitution. So by the states waking up and telling their constituents that, hey, you're getting robbed by inflation and by the brain dead monetary policy of the Fed, we're going to start to allow you to not only hold gold and silver and pay your taxes in it, but to use it in exchange for all debts, public and private. And look, you got Ohio, you got Texas. They both passed bills that are allowed to have 5% physical gold holding in the public pension funds. West Virginia, Mississippi, Maine, Tennessee, Montana, they're considering something very similar to what Idaho just did. It's a big deal. It's a really
Hmm.
big deal. I think it will wake up the U.S.
Yeah.
Public. As far as BRICS, there hasn't been a ton new with BRICS. The only thing that I would say is that Hungary just did something very interesting. When all of the Eastern European banks repatriated their gold leading up to this reclassification of gold and all the things that were happening, Hungary was one of the ones that was in the mix here. And they just, the Daily News announced that hundreds of high ranking military officials that were all sympathetic to NATO were fired. And so you're talking about even including their defense ministry, or minister. And so all of these people they fired were pro NATO officers. I think this is another indication that you're going to see, just like Turkey, you're going to see Hungary move into the BRICS fray. We talked about Turkey buying more gold in 2022 than any country on the planet, and also joining the BRICS nations in 2022. Well, that trend continues. They bought 23 tons in January, making it the biggest buyer of metals amongst the central banks in the month of January. And so you're seeing that was followed, by the way, by China and Kazakhstan. Kazakhstan, a member of the Shanghai Cooperation Organization, I believe in the Eurasian Economic Union, and obviously China in the mix on all of these groups that are by the day coalescing. So yeah, I think that it's getting a little bit interesting where
Yeah.
our country has given $114 billion to the Ukraine, including giving pensions to the Ukrainian government, when there's a $1.75 trillion shortfall in U.S. pensions and $5 billion to build a wall to protect our border from letting fentanyl and 5 million illegal immigrants pour in isn't. Well, that's
Right.
too much, but 114 billion
Right.
isn't. And I don't know, it's getting crazy. It's getting crazy. And I think while there wasn't as much to talk about this time with the BRICS, I have the feeling that this will be the year of the BRICS. And
Yeah.
as we continue down through 2023, that will certainly dominate what we talk about from week to week.
CNBC posted something a couple days ago. It says Iran says it just discovered what could be the world's second largest lithium deposit. It's like, how timely.
Yeah, well, and so these countries, the countries in the Eurasian continent, at the primarily the Eurasian continent. These countries have all the majority of all
Yeah.
the rare earth metals that are needed in electric vehicle and battery production. So while we haven't thought this through very well, we
Yeah.
tell Saudi Arabia we're going green, and yet you have President Wadudu from Philippines, maybe. I want to say one of these countries. Probably getting that wrong, but anyways, he's a member of OPEC, so I don't think it's the Philippines. It'll come to me in a moment. But anyways, he said that we need to have a OPEC style cartel for rare earth metals as well. So, this is a situation that is not going to end well with energy prices
Yeah.
when Saudi Arabia ditches the dollar as a settlement currency and we try to go green, reliant upon other countries around the globe that have all of the rare earth metals that are needed to make battery powered vehicles and whatnot. And these countries aren't going to be eager just to
Yeah.
give them away to the U.S. and to the West. So yeah, man, it's never been more tenuous and never been more
Yeah.
important to be a contrarian.
Yeah. Man, there's such a big power shift happening. Like I feel like this is such a big play of and it's genius. I mean, like I can't even hate like it's like we shot ourselves in the foot, it seems, but also they almost saw this coming and they knew we would shoot ourselves in the foot. So they've been this whole time kind of, you know, adjusting around it. But
That's
uh
exactly what I mean. It's a lot of it is mathematics and logic, but yes,
yeah,
you can see it's happening, and they have adjusted. I mean, you got massive energy deals that are being signed right now. China National Petroleum Company, the largest gas importer in the country, and this one's they just signed the an import deal with Qatar. It's the largest long-term liquid national gas deal ever. I mean, so they're buying uh, energy in other currencies from other countries. They're sidestepping the dollar as settlement currency. It's getting real very, very fast.
yeah. Wow. Wow. Well, I feel like we covered a lot in this episode. Thought it was really good. Just wanted to say thank you for your time, and
Of
I hope
course.
everyone enjoyed this episode. If you did, please like the video. We're on the road to 100,000 subscribers. Crazy. I can't thank you all enough for the massive amount of support. Doing a giveaway. I'll post the entry video in the description. It is live. You can go enter. I'm giving away an entire tube of sealed eagles. An entire tube. So all you gotta do is click one button and go enter. And if you wanted to also purchase some silver from Miles Franklin, Andy Shectman's the CEO. Just send an email to info@milesfranklin.com. Website will be up soon, but just as easy to buy from them on there. So yeah. Anyways,
You
this
can
was
you
Silver
can
Slayer. Oh,
why don't you add another tube on that giveaway
oh
that we'll
wow.
take part in as well, so you can have two to
Oh
give away.
wow. That's
We'll add into that as well. And were we going to do a live stream next week?
yeah, we can do that. Yeah, and next week, yes, on Wednesday we could do a live stream.
Maybe do it Wednesday evening. We'll lock down the price.
Maybe we
But
could pick the giveaway winner
yeah, do it
on the
live.
live stream. Yeah.
Yeah,
So okay, so yeah, wow, two. Wow. That is a massive giveaway. Someone's gonna be happy.
yeah.
But
Let's do
yeah,
it.
all
Or
right,
two
cool.
people.
Yeah. We'll figure it out. Maybe we could do two, or yeah, we should do two, maybe. But yeah, so that's breaking news right there, folks. You just heard it. So I hope you guys enjoyed this. Make sure you subscribe. Thanks for tuning in to Silver Slayer. See you guys soon. Peace.